get straight into a look at what's happening in the currency world. I mean, things are pretty quiet and tempered here in South Africa. So let's perhaps start off with your view on the more active markets out there. Of course, the euro very much in focus, and that with the ECB decision on interest rates coming through tomorrow.
Morning, Alishia, and compliments of the season. It's good to be back in 2013. But yeah, diving straight into the international currency markets, as you mentioned, the euro certainly is top of mind. While things seem to have died down on the debt front, things in Europe, it's still very much a story of the fiscal cliff happening in the US. So for now, we would, although we don't have a very strong bias directionally as far as the euro is concerned, we would be looking for it to strengthen further against the dollar. In particular, if tomorrow, as expected, the ECB does start to signal a softening in its stance and a move towards easier monetary policy. It does certainly seem, looking at credit markets in Europe, that things still seem a little bit tight and money not flowing through in the way that it perhaps should be. So we do think that the ECB will take cognizance of the latest data and will probably signal a move towards easier policy if they don't in fact actually begin to cut rates tomorrow, or signal the use of some bond purchases to try and improve liquidity in that area. So certainly in the short term, we'd be looking for some moves from the ECB, and that will probably help to support some greater strength in the euro, and conversely a little bit of weakness in the dollar.
Even if that support does come through from the euro, though, how much of that do you see rubbing off on the local unit? Because very much in play right now are domestic issues, and that affecting some of the risk sentiment at this stage.
Yeah, absolutely. I think when it comes to the rand, the situation is a little bit more ambiguous. We saw the rand did strengthen over the holiday season, largely as importer hedging demand started to slow down over the holiday period. So as people come back to work this week and the next, it certainly does pose some risk for the rand that as that hedging activity picks up, the rand could experience some weakness. It also does seem that part of the rand strength may have been related to a bit of unwinding of the risk premium that may have been priced into the currency ahead of Mangaung, and of course the outcome from that was pronounced widely to be relatively business friendly, and that also helped to support the currency. But that effect could also start to fade as we head later into January and then into the later months of the quarter. So at the moment the rand's still enjoying some strength, but it does seem that the risks at this point do seem to be stacked a little bit biased towards some rand weakness coming through.
I was saying earlier on in the show that we had very little reaction by the local unit to the economic data that came through, that the reserve numbers. Today we've got a couple of economic data points filtering through to the market as well, that being business confidence and then vehicle sales numbers as well. Your expectations on those fronts?
Well, I think as things remain pretty quiet, we're not likely to see a huge reaction of the rand to that data. Obviously, business confidence has been a little depressed in recent months. So if we see, if it indeed does turn out that a large part of that was related to, some trepidation ahead of Mangaung, then certainly an improvement in business confidence could seem to be signaling better times ahead, and that could be broadly positive for the currency as well. Same if we get quite a positive picture coming through for vehicle sales, but I don't think that those two numbers on their own are largely going to affect the currency. I think really the most important bits of data are yet to come. We have manufacturing production coming out, and of course that is still going to encapsulate some of the effects of the strike activity that we saw towards the end of last year. So I do think that that is likely to be an altogether more market-moving number as far as the rand is concerned, and of course is then going to play into expectations of interest rates with the next meeting coming up fairly soon.